Hello, everybody. My name is Ronald. I'm the co-founder of About Fraud, and I'm the host of our webinar today. Before we go into the introduction, I have only one housekeeping rule. Please ask questions. So on the right-hand side of the panel, you can see a chat window where you can type in your questions or comments, and we will try our best to incorporate your questions into our panel discussion. Okay, that's the only housekeeping rule. Please keep it interactive. Who's actually here with me today? We have on one hand side Alexander, and on the other side we have Alex. Maybe Alex first, who you are, and give us a short background about yourself. Welcome.
Sure. So, hello everyone. My name is Alex Zeltcer. I'm CEO and co-founder of nSure.ai. nSure.ai is a payment fraud prevention platform that provides chargeback guarantee solutions primarily for digital goods. I've been in the market for quite some time now. My previous business was a digital gift card marketplace where we've kind of suffered the losses of payment fraud on digital gift cards and learned our lesson on how difficult it is to actually sell cash in some sort online, and decided to kind of launch a company that is all around dealing with that, helping merchants avoid the suffering we've had to go through. And happy to be here, Ronald. Thanks for having us.
Thank you, Alex, for being here. Alexander, your turn.
Hey everybody, my name is Alexander Hall. I'm the owner of Dispute Defense Consulting and the host of the Fraud Prevention Roundtable. I have 15 years of experience in fraud-related topics. For those of you who don't know, I did operate as a fraudster for 10 years. I caused a lot of damage. I targeted just about every industry. I employed most of the methods that have been outlined in our community, plus a lot more, and I was never busted. In 2017, following the birth of my daughter, I joined the ranks of fraud prevention, and now I'm here. I work with merchants to develop in-house strategies, leveraging automation provided by great vendors such as nSure. And I work with service providers and vendors in our space to further reinforce their offering in many different capacities, all under the umbrella of SME. Thank you so much, Ronald. Alex, it's a pleasure to be with you again. Let's have fun.
Yep.
Thank you, Alexander, for joining as well. So today we have prepared a few slides to give the audience a bit more background, some history about digital goods and why they are different. And then we going into a discussion. But again, please feel free to use the chat box to ask questions anytime. But Alex, this is your turn to give us some more background about where's the problem and what we're talking about.
Sure. Oops, you're driving the slides, right, Ronald?
You can do it.
I can do it. Oh, all right. So the first, it's primarily, guys, for context. It's not an educational session. It's really about disseminating information and sharing our views. But just as context, I'd like to share with you a little bit about how CNP or card not present transactions became the merchant's issue, followed by a little bit about what's different between digital goods or other types of assets and standard e-commerce. So first of all, how did CNP become a merchant issue? So imagine, in the 50s when the first credit card issuer, our company that started from Bank of America, came to a grocery store and told them, you're used to people coming in and using bills and notes and coins to buy cheese, right? And from now on, you're going to see people coming in with a small plastic card that's going to have numbers etched into it. We're going to give you a small machine with carbon copy paper that you'll put in there. You'll put the card. You'll do this strange, movement of the machine. You'll get the paper back. You'll say the guy owes you $10. You'll ask him to sign. You put it in the cash register and you give him the cheese. And obviously the guy from the grocery store said, "Hey guys, no, you missed the point. I'm not releasing the cheese before I see the $10. There's no way. it's my business. And they said, no, don't worry. We're a bank. We're regulated by the government. And if you have that piece of paper in your signed by the guy and you've ID'd him or whatever, then we're liable for it. It means you're going to get the $10 no matter what. If it's in there, you're going to get the $10. And by the way, they did the same on the other side, on the consumer side, where, if you're a consumer at that time and you lost your wallet, you lost $100 or whatever you had in your wallet. Now, if you lose your credit card, you may lose your entire bank account and your entire life savings. And therefore, the credit card company comes back to the consumer and says, no, don't worry, guys. It's all good. If you identify transactions you don't recognize, you just tell us and we refund. It's all our liability. So they had to guarantee both sides and create the trust that enables this entire payment network to exist, even before it became electronics. So that's how it happened. That's how credit cards started. And then, think about 2 years, 3 years later, the guy from the grocery store comes on board and calls the credit card company and says, we have a great client, Ronald. He's calling us every Tuesday regularly like a clock, and he's placing like $1,000 order. And then he comes in on Friday at 4 p.m., the worst possible time, a very long line. He has to stand in line. He gives us this small piece of plastic. I do this small, this strange movement that you ask me to do it with this strange machine. Why do I need to do that? When he speaks to me on the phone, I'll just take the number. I'll write it down on that same piece of paper you gave me. I'll put it in my cash register. I'll say he owes me $1,000, and we're done. It's all good. When he comes in, I just give him the bag. And so the guys from the credit card company thought about it a little bit and said, it sounds reasonable. That's good for us, right? Because God forbid he may come in and pay cash. We don't want that. So we prefer that he pays you on the phone. However, if you're certain you know the person and you can recognize the voice and you know it's him, take the transaction. We can't be liable for it. We don't know. And therefore, they invented what was called card not present. That's how it happened with the initial transactions on the phone. And then kind of roll the timeline 20 years later. The same guy from the grocery store calls the credit card history and says the credit card company and says, we have there's a new thing. I don't know if you've heard about it. It's called the internet, and I can take transactions there. There's a new system there that allows me to take transactions, and your credit card system is a great fit for it because I don't need there's no way to transfer the cash. It's great. So they thought about it a little bit further and said, hey, tell us a little bit more about how the transaction happens, what's going on. Do you see the person? Do you talk to him? And then obviously they explained and said, oh, you know what? We understand that's a card not present transaction. No problem. Take that. It'll be a card not present transaction. It's completely your liability. If you want to take it, we're glad you're taking it, but we're not going to be liable for it. And that's how it happened. It's really, if you think about it, it's a mistake. It should never have happened. It should not have been the merchant's liability. But that's what happened there. And we know the regulators are working to change that. It'll take 5, 10, 15 years, God knows how long. Eventually, it'll be back with the banks. But until then, we have an issue we need to solve, or the banks will have an issue they need to solve later on, the issuers. So that's a little bit about that. And then the second piece that I really wanted to bring into context is to explain, because it is a merchant issue, it creates a difference between digital goods and physical goods. And the reason for that, and by the way, when I say digital, things like tickets, like gift cards, like games, bank accounts and wallets, cryptocurrencies, anything where you can transfer value immediately and the value is liquid, means you can turn it into cash. Anything that has that combination is very different from a merchant perspective, primarily because it attracts a different kind of fraudster. And the reason behind that is that when you look at physical goods or e-commerce in general, and you think, again, it's a merchant issue, it means that if I'm selling, shoes or fashion, as long as, I stop the transaction before the goods are actually delivered, are actually shipped to the consumer's doorstep, if I stop the transaction anywhere in that time frame, I'm safe. I haven't lost anything. I didn't make the transaction, but I didn't lose the goods. And that could be hours to days later, and obviously gives us a lot of time to reassess the risk. In digital goods, that's not the case. When you're buying a gift card, when you're buying crypto, when you're loading funds into an account and can immediately take them to a different account, there's no time to reassess the risk. You have to take the decision immediately. And that creates two issues. One is that the entire risk profile is different, but the other one is, as I mentioned, it attracts a different kind of fraudster, more like Alexander here on my left. I don't know if it's on yours too. So and the reason for that is that fraudsters that do this as a business are looking for and think about, and Alexander is gonna I hope is gonna share a little bit more of the intricacies of that as we move forward. But basically, they acquire a list of stolen financial instruments on the dark web, and then they need to turn it into more cash than whatever they paid for it. That's the business, right? That's the way for them to make return on their investment. And now imagine how do you do that, by the way? Clearly, you buy a list of stolen financials. You need to buy things and resell them in order to make that cash. Now imagine the difference between buying and reselling 1,000 shirts or 1,000 iPhones and buying and reselling 1,000 gift cards or 1,000 game codes for Xbox. It's not the same type of operation you need to put in place. And obviously, as a result of that, the fraudsters invest heavier in attacking digital goods or financial services or crypto currency exchanges. And as a result of that, we see there what we call scalable fraud. And the scalable fraud patterns are extremely different. And the reason we're having this webinar is to try and share a little bit about that, about the how is it different, why is it different, and what can you as merchants do about it. And I'm going to stop at this point and transfer it back to you, Ronald.
I think, first of all, thank you, Alex, for this kind of especially about the story. I think that's very reachable to really understand how this is coming from. But I think also touched an interesting point about how to define digital goods. And that's then also maybe one question to Alexander on one hand side. Would you describe digital goods in the same way? But also understanding from a fraud point of view, would you even differentiate between what is digital and what is not digital, and I'm focusing on this one, I'm specializing on this one, or how is this in the fraudster world? Do they actually really putting this into different buckets?
Sure. So from the fraudster's perspective, the most glaring, the most obvious difference is the fact that there's no need for a shipping address. When you consider what a fraudster needs in order to operate and receive stolen goods or things that were purchased illicitly, like cell phones and fashion and things like that, physical goods, you need a place to send it to. So these come in the form of drop houses. Well, in order to get a drop house, there's a process that a fraudster needs to go through. There's discovery, there's work, there's boots on the ground work that needs to be done. A fair share of time is dedicated to establishing drop houses that a fraudster can have stuff set to. Without that need, when everything's being delivered either to a digital account, a digital wallet, a digital email, an app on a phone, that removes that entire need for work. Secondary to that, the shipping address, fraudsters are aware that the correlation between a billing address and a shipping address is very important to the risk determination, the risk assessment and determinations of a merchant. So taking that out of the equation entirely makes it amazing for a fraudster to attack. They see that value there. And then third, to what Alex had said, it's an immediate process. You buy it, it's delivered, and now you own that. Now, moving on from there, secondarily to what Alex had said, reselling it, reassigning it, converting it throughout a marketplace, the gift cards, the crypto, all of these platforms that allow you to take value, store it in a wallet, and then use it secondarily. Now, all of these digital items immediately have that value. The code can be sent over there. The gift card information can be sold on a platform. The crypto can be moved over there from a funding account to a mule account or whatever combination that you might see fit there. So with that, all centered around the removal of a shipping address, fraudsters see tremendous value and tremendous ways to attack. The last part that I would say is kind of on the lower end through the lens of a fraudster, but it's definitely important, at least it was in my operation, and that's the ability to test cards. When it comes to buying financial information, or when it comes to hijacking it or creating it your own, whatever form or fashion you get a list of card information, you want the ability, or the fraudster wants the ability to test, how viable it is in the market, how useful it is, where it works, how it works. And again, this has many applications throughout the marketplace. And with digital goods, that is a quick and easy way for a fraudster to get a quick response with some value relative to testing cards. So those are the three main points that I like to bring up. But there's, of course, there's more, and there's caveats, there's combinations, but those are the three main ones.
But I have a question to this, Alexander. I think an important point what you described is the time to cash out. Because at the end, the fraudster is not buying the pair of shoes or buying the gift card or buying something else. At the end, he wants to monetize it somehow and getting cash somewhere or having the somewhere on an account. Why would a fraudster still going into an e-commerce environment and shipping something if the digital world is so much faster, more distance, less complex? So what is the reason for fraudsters still looking at e-commerce if digital is so much easier and better?
So there's still a value with physical goods, no doubt about it. If a fraudster has done their research and their experimentation with the system to find out what does work, getting the cell phone shipped in a way that will work 100%, or at least has a good success rate, the value is there. The physical goods are still needed for fencing. The physical goods are still, fraudsters still want the same stuff that we all want. They just go about getting it a different way. So the value for physical is still there. It's just for experienced and motivated fraudsters, they understand that digital goods can be got, right, and then secondarily employed to then go get the physical ones. And to the point that Alex had made, crypto, gift cards, and then stored wallets where money has been moved around, or maybe store credit has been stored, all these digital items. The ownership is with the app. It's who owns it, it's who has it, who uses it. It's no longer associated with an issuer, with a card holder information and things like that. So using the digital goods to secondarily get a hold of physical goods is also another method there. And it's going to have the same desire to get those phones and those clothes and those things.
Yeah, and I think just to add to that, if you don't mind, Alexander, obviously that's your area of expertise. I'm not, I'm from the other side of the fence, but I think that it attracts a different kind of fraudster. As you mentioned, the guys that are looking to do this in order to steal an iPhone or a flight ticket for a flight for tonight, on a short, on a less than 24 hours or whatever. I think that this is one type of fraudster that would still go after e-commerce, and there's a lot of it. If these type of that level of sophistication is tried against digital goods, it's just not going to work, because defenses that merchants have created around digital goods are so high, and as a result of that, the decline rates are so high as well. They just won't go through it. And the only way to do that is to employ much more sophisticated methods, which is what we're seeing that is evolving now on the market. And we're seeing these, scalable fraud patterns emerge. When we look at patterns, we're looking at patterns that are very similar to DDoS in nature, to distributed denial of service. It doesn't look like, a person here or a person there trying to do something. No, it looks like a group of seemingly legitimate individuals that comes in, and they're not trying to shut down your servers. They're trying to suck up all of the inventory, basically. So it's a very different type of method of an attack that you see in these two different worlds.
Absolutely.
What I have seen on the consulting side is companies who coming from a brick and mortar side, who are used to sell items in the shop, since they transformed into selling something online. But then they went one step further and selling also digital goods like software downloads, gift cards, certain accounts. And I've seen companies struggling with this understanding that they cannot apply the same what they're doing for shipping a phone or shipping a computer or shipping a washing machine in comparison to shipping a gift card. How do you see the world, Alex, on this part? Do you see companies still struggling today with this kind of mental understanding? There are two different pair of shoes, and they really need to apply a different approach, a different structure, different data, maybe different tools, or do you think that's already not really the case anymore?
So from our experience, and our previous company, as I mentioned, was a digital gift card marketplace, and I think that specifically for gift cards, most of the merchants have were either burned on their own or heard horror stories from colleagues, and they know not to try and treat gift cards the same way they treat their standard physical goods, because if they do, they get hammered, right? They go bankrupt. It's very simple. I can tell you when we launched our marketplace in the UK, the first week we got hit with 40% fraud. We were very happy on the first week because we sold out everything. And by the way, it ended up as 40% fraud just because we were out of inventory. It's a good thing we weren't connected on the back end to income and couldn't issue more cards. But so people know about that. But when you look at on the other hand, people that are doing pure digital, like crypto exchanges or gaming marketplaces, etc., they are aware of the issues and know that they need to employ something different. What's interesting to see is that now a lot of the physical good merchants go with more and more digital goods beyond just the gift card. The gift card was something that they know they need to outsource to someone else, and there are lots of different companies that offer that service. Now that they're trying to sell NFTs, for instance, we've encountered a number of companies that have a very successful physical goods business, and now they're trying to employ some of that into NFTs in various different ways. And once they start this, as soon as these NFTs become valuable to a certain degree, they get hammered because they're trying to employ the same method. It just doesn't work. So what we're seeing now is that physical good merchants that are starting to sell more and more of these modern type digital goods, and not just the old-fashioned gift cards or prepaid or stored value. That's where the difference lies, and I don't think that they're interested in outsourcing that, because that becomes a bigger and bigger part of their overall business. No one would think of outsourcing the entire e-commerce, right? Maybe the technology, but not the business itself, not the merchant of record, not all of that, and that's where we're seeing merchants kind of hitting a light bulb and saying, we need to find a way to treat it differently.
But if they're using a service line like yours, Alex, say outsourcing, let's say, the checks to a certain part, I mean, the final decision, what they do and how they're setting it up, is still, I think, majority on the merchant side, but they outsource this kind of, let's say, expertise and technology, which they cannot really build up internally that fast and really competing with the fraudsters coming left and right into the business.
Exactly. And I think that if at e-commerce you could rely on an internal system of rules and be pretty well protected, buying more data from external sources and putting it all. If you're trying to do that on the digital side, it just breaks, and we've seen that way too many times. It just breaks. You get into you get on VFMP, you get on the MasterCard excessive dispute program, and it's a mess. It's a mess.
I have a question to Alex, and then I would like to turn the question to Alexander. Alex, from your point of view, now let's say look specifically at this NFT world where we have high value items which are easily transferable. What are, from your point of view, maybe the 3 top signals So when we talk about fraud, it's always about data. You have different data points, you define footprints or pattern, or you have certain elements which you connect. Do you have anything where you believe that is the kind of 1 or 2, 3 elements which really makes the difference? Or is it more the combination of everything and how you're dealing with the data?
Yeah, so I think that there's no silver bullet. There used to be, I think, right? There used to be email age was the silver bullet, right? We all thought this is gonna stop fraud. And that was, I don't know, 10, 15 years ago. I don't remember when. But today that's no longer the case. I think that the main thing is identity verification fails in the digital world. You cannot just go with identity verification. Especially when you look at the NFT, when you look at crypto exchanges, people are not interested in providing you their real identity. They have their digital identity, they're going to use it. And the standard tools looking for identity verification, even the big hammer that's being used by the regulators with KYC, know your customer, it just breaks. It doesn't work there. And you find yourself just declining legit customers that just don't want to share the information. And then you have to go look elsewhere, and what you really need to look at is behavior analytics, and you need to look at different aspects that would help you recognize a certain type of behavior within your marketplace, and being able to do that is not one signal here or one signal. I could give you examples, like it's easy, right? How long do you hesitate before you key in the password? How long does it take you to get through to checkout? What pages do you visit when you go through? There are like hundreds and thousands of such, pieces of data that you can. I don't know, everything okay? I got kind of a screen that said that I got locked out. You can still hear me, right?
Yeah, all good.
Yeah. Okay. Sorry for that. So the thing is that there are you cannot just use one or two, and the reason for that is that I go back to my example of DDoS. So what I can share with you what we're doing. I'm sure that others are doing either similar stuff or maybe different to do that. We're not the only player in this world. Obviously, what we're looking for a correlation between. We're trying to create groups of people or groups of identities that look to be coming from a similar source, very similar to what is done in DDoS, for instance. So when you look you look at the first session, and you note the time it took you to you hesitated 2 seconds and 13 milliseconds before you keyed in your password, and then it took you that long to do whatever. It looks okay. There's nothing you can say about that transaction. That entire user session looks okay. The second one, maybe if it's with a very small margin of error between these numbers, may still look okay. Fifth or sixth that happened within 1 minute, start to raise kind of a bar that says, hey, that's a little bit risky. And then maybe on the 7th or 10th, you'll say, okay, now I understand there's a group of people behaving similarly. And obviously, the example I gave can be fought very easily on the fraudster side. He says, yeah, I'll change that. Then the issue is, okay, but I will be tracking thousands of these parameters. Now, let's see how you change all these thousands of parameters without me being able to identify the group. That's the point. And therefore, just giving you an example of 1 or 2 or 3 very strong signals is just going to break. And I can tell you, our signals are very different on every merchant. Every merchant has other signals that are much, much stronger. And as a result of that, you have to really create, because you're looking at behavior analytics and because you're looking at consumer behavior on the site, and because the user journey is very different, you have to create models that are dedicated to each merchant. You cannot just, you cannot adapt one merchant to the other. They're not similar in any way. That's what we've seen.
Thank you. The question now to Alexander is more, if you're looking at the evolution, like I think someone mentioned before, looking about distance between IP and shipping address, So it's more like a cats and mouse all the time, trying to adapt and understanding what the merchant does or which kind of rules they have and adapting this. So maybe, Alexander, maybe can give a bit of background. How did they change over time? How you actually try to understand what the merchant is doing? Did you always do the same at different merchants, or as Alex mentioned, different signals for different merchants, of course, nowadays, but in the past, most likely they use similar tools, similar rules. And now on the digital world, everything is it's so massive. You have so much data. And how can actually fraudster keep up with such a complexity? This is now a network which needs to work together, and before was more like a single fraudster. So it's also like a change of community on the fraudster side to really combat this kind of fences which all these digital players building up.
Sure. Okay. So my approach, I wrote a piece called "The Three Pillars of a Fraudster's Operation." All information that I've encountered can be boiled down and categorized in three categories. There's payment information, there's identity information, and there's system knowledge. So when we talk about the wealth of information that's out there in the world, every single one falls down into one of these categories, right? When it comes to finding vulnerabilities in a system relative to a specific outcome, to what you had said, Ronald, there is a specific set of questions that I would ask myself. And then by leveraging these different sets of data, I would attack 3 or 4 different ways across 3 or 4, or using 3 or 4 different maybe VPNs with the SOC 5 and the trying to geolocate myself to be within a certain proximity to the billing address. That would be one approach. A second approach might be to use a card and in a billing address that's just in the same city or in the same zip code. Another one might be one where I'm not using anything, so I don't use a VPN at all. All of these items, all the failures and all the success, will tell me what the merchant is verifying. Now, to what Alex had said, when we move into this new digital age, anonymity is and the customer privacy idea is super important to everybody across the board. And when you get into things like NFTs and cryptos, that's even further. It's driven further, right? And so when it comes to a fraudster looking at that situation, I see that not only are they trying to protect the privacy, so they're not collecting as much data, but in addition to that, they're coining on the fact of anonymity. They're like, that's like the gimmick there is anonymity. So when I look at that situation, I see to what Alex had said, I see the need for something other than the PII information being collected at sign up and at and across the customer experience journey. Something else needs to be there. And when you get into behavioral analytics, that's when, to what Alex had said, that's when when a community of fraudsters, regardless of how big or small or where they're located, when everyone is attacking using a similar set of software or a similar approach, that's when behavioral analytics can be employed to detect those ideas or those methods without sacrificing customer privacy and all those things. That idea, without coming down over here, we get to go up over here, right? But to a fraudster, I think that's the biggest thing to consider is what information is being gathered, going through a process to discern what information was verified, and then third, work out the frustrations. The biggest problem for me that I encountered was not knowing why I got shut down, right? And the thing that's really cool about like behavioral analytics and biometrics, well, biometrics, you can pretty much tell I failed the biometrics, but at least with behavioral analytics, you don't know why you failed. You don't know what to adjust. With payment information, you can say, okay, I need a full set of payment information and the PII that I submit in the checkout form needs to be on point, plus my IP address needs to be near that, so go get a VPN. It's a pretty easy thing to put together when you have the tools and the knowledge. When it comes to behavioral analytics, you don't know where you messed up. And so to a fraudster, it's super frustrating. And ultimately you end up losing interest in trying to discover it because now you've burned through 100 sets of stolen information. and you just give up on that platform. So now I'm going to go try and get my crypto somewhere else, or my NFTs, or my gift cards, whatever it is.
Yeah, and what we've seen on our side, Alexander, I don't know if you've ever noticed something like that, but what we try to do is not only frustrate you with not knowing why you failed, because you have your own tools. They're probably pretty strong, and you can gather some pieces of information. What we sometimes do is we would not let you know you failed. You would think you have succeeded. We would provide you a fake product, or you would think that everything went through okay. Only later on would you realize that you haven't. At that time, by the way, you have burned through maybe more than 100 financial instruments. And from our experience, once that happens, you never come back.
That is awesome.
Yeah,
I think
we're not employing that a lot. We're not employing that a lot because it has a downside when you're making a mistake, obviously. So you have to be very careful when you do that. But it is we one of the things that we've identified, as you mentioned, I think that when the fraudster gets frustrated, and again, you know that better than I do. He's not trying to prove he's smarter than you. He doesn't care. He just wants to, he just wants to get the cash. Period. Yep. So if it doesn't work, he just goes elsewhere immediately. Yeah. Once he figures out it doesn't work, he's gone.
But I think a really nice point. I just imagine you just issue a wrong gift card code as an easy example. The fraudster does not know. I mean, the fraudster most likely will not validate the gift card number. He would resell the gift card, and he would actually fraud another person with the gift card, and they would be upset about, let's say, the seller. I think that's an interesting one.
What we've seen, by the way, from that, and on that aspect, I do have a lot of internal information from my days as as running a gift card marketplace, and there what you see is that all of these. Not the eBays and the Craigslist of the world, but the Raises of the world, or the Card Cash and the Card Pool, all of these, they would test the card first. They would try to get, do a balance check before they allow you to sell it, and then the fraudster would lose it. So we're trying, the methods we employ. Our goal is to help merchants and protect consumers. And hurting fraudsters is not a goal at all. It's only a means to an end. So what we're trying to do is find these methods where no consumer would get hurt. We're investing a lot on that aspect to make sure that whatever we provide, even if the fraudster is unaware that it has no value, it would get stopped at some point. But that's a good point you made, Ronald. A very good point.
Yeah.
I also have a very interesting example here. I worked with a dating app who actually looked about fake accounts, and the easy one would just stop the account, but they did not do this. When they detected the fake account, they actually just put all the fraudsters in one room. So they just spammed each other and kept going, etc. So I think that's an interesting point. Like you mentioned, Alexander, before. If the fraudster does not know what doesn't work or gets frustrated, they might hopefully leave and go somewhere else. I think that's an interesting point, which we have talked before in a different webinar, destroying the business model of a fraudster. Maybe it's potentially the best way of getting the fraudster out of your platform.
Exactly.
Yeah.
And we got an answer, a question, I think, from Tarun. Everybody can see the questions, or only the presenters?
Everybody can see it.
Everybody? Okay, so I don't need to repeat it. So basically, the thought behind, and again, as Ronald mentioned, providing you with a fake card number is just an example. There are many ways of doing that, but the idea behind it is not to annoy the fraudster, but it's actually to cost him, and the cost is in the financial instrument that got lost doing it. Because what happens when what we've been very adamant about is, if we do that, we're going to actually process the card all the way through. We're going to authorize the transactions. We're going to capture the funds, and then we're going to do the refund. Or we ask the merchant, obviously, to do that. Then he'll do a refund, immediate. And when you do that, you will see that 99% of the time, if you're doing that, and imagine it's done on a site that the original owner of the card statistically has never been on, right? It's the first time this card has ever been used on that site. If that happens, the issuer is going to block the card. And if the card is blocked, cost the fraudster whatever he paid for it. Was it $10 or $50? Depends on the credit. And Alexander, you probably know the prices better than I do, even though we do crawl the dark web for that. But that's the cost. And if you do it well enough and you cause the fraudster to lose like 10, 15 cards without him being aware of it, it could be, like a $200, $300 pain. And that's why he gets away. Not just because he's annoyed, but because it actually cost him.
And then to what Ronald had said, secondarily, so I don't count among the fraudsters that transacted in reputations on the dark web. I wasn't that kind of fraudster. However, we are all aware that they transact on their reputation. And to what Ronald had said, if somebody comes in and says, hey, I just got 100 gift cards, buy them from me, send the thing and I'll send the thing and we're all good to go. And then none of them work and they get 100 bad reports. Now the reputation suffers on the platform that they're reselling on, or their reputation suffers with other people, who might be willing to buy these cards. And it's like, oh my God, I got a bad batch. I got a bad deck, or whatever it might be. So the trouble for fraudsters in this counter offensive is super powerful. And stands to leak into the platform, damaging their reputation among the others. I love that. That's so cool.
You have to be very careful employing it. It's not something that that we do lightly, and it's where I can tell you wherever we employ that it's on less than 0.5% of the population. It's where it's where our, let's say the level of assurance we have that this is a fraudster is extremely high, and even then we put in a lot of safeguards to make sure that we don't harm legit customers.
Nice.
Yeah.
But looking at the crypto exchange, as I mentioned, Alex, before, I think a lot of people talk about this. And we can see that a lot of companies struggling with really doing a nice end-to-end process, really like the account creation, all the KYC, uploading into the wallet, transferring the money. And I believe that's also something which creates complexity. And let's say in the favor of you guys who are dealing with complexity, that you're not only looking about one transaction, but you're looking about a lot of events, a lot of data. And out of the data, you're trying to see the network effect or what is happening on scale. But how important, you mentioned this before already, how important do you believe is the whole onboarding process? Do you believe crypto companies can do something better if they know that a typical KYC is really weak? So, everybody is doing it somehow, but many companies know it's not that protection anymore. Is there any advice which you would recommend in an onboarding process?
Yeah. So our experience is, first of all, it's important to say when the regulation requires you to go through KYC, then there's no avoiding it, right? You do what the regulator says, right? We're as I said, we're on the white hat side. So whatever the law requires, we do. But the thing is that, and I think that today it's still the prevalent notion is, if you do KYC to everything, it would be better. And that's the issue. People believe that adding friction is the right way to go to avoid fraud. And I sincerely believe that that's the wrong way of doing that. And I think that, and the reason for that is that sophisticated fraudsters would always find a way to go around the friction you're adding, whether it's email verification or phone verification or 3D secure. I can tell you, we're working with merchants in Europe that have, that some of their clients are in Europe, some of their clients are, from outside of Europe. Our recommendation is immediate. Stop 3D secure outside of Europe, where you don't have to, right? Because you have to only when both the acquiring and the issuing is done in Europe. If you don't have to stop it. And what we're seeing is even though the chargeback rate for what is 3D secure is zero or very close to zero because there are no chargebacks, the liability is not the merchants, the fraud rate or the dispute rate is exactly the same for digital goods. Exactly the same, even for games. Not even for gift cards, no question. Even for games, the fraud rate is the same. So whenever you have something that is fraudster attractive enough, you would find the fraudsters developing the tools to go around the friction you're putting in place. And as a result of that, our recommendation is don't put the friction unless you're required to. Wherever you're required to, you do what's required. There's no avoiding it. But then when you don't have to, find another way. And it could be different ways. Behavior analytics is one. Sometimes looking at IP addresses and email age helps. Sometimes looking at cyber intelligence signals helps. I can tell you that in crypto, there are many tools today that crawl the dark web and provide you real-time information about selling of accounts. So when you know an account was sold, you know that account was, don't accept that. And it's very easy. It's much better than adding the friction that primarily frustrates your good shoppers. That's what happens. And from what we've seen, 60 to 70% of the people that get declined on their first transaction never come back. They go elsewhere. And if you're in the US and it's not crypto but anything else, you go to Amazon. If it's crypto, there are so many exchanges today, you just go elsewhere. So our recommendation is always avoid friction, find another mean.
Mm-hmm. I have one comment on the 3DS for Europe, and then I have a question. I mean, I'm based in Europe. I deal with a lot of 3DS topics. I think the interesting point, Alex, what you mentioned, the chargeback rate on merchant side is lower, but the fraud is, let's say, more or less the same, but the liability shifted to the bank or to the issuer.
Yeah.
And that's the interesting part, that a lot of issuers never deal with whatever goods because it was on the merchant side. Now they have certain, let's say, thresholds from the schemes to keep acceptance rate high, but they still at the same time need to make sure they're not running any issues. But they normally don't have this kind of knowledge dealing with all this, what is now crypto transaction, what is now this. So do you see a high need for banks or issuers now to adapting the same way? Because now we talked about the merchants who are dealing with the digital goods, but at the end, if the bank is liable, they need to be on the same pace like all the merchants.
Yeah. So my view on this is, and again, it's my personal view. I don't know. Right. I'm not a prophet, but my view is that the issuing banks would have to create that expertise in-house or acquire it somehow. We're seeing them trying all different ways to avoid the problem and find a way to alleviate the pain. We've even seen excessive amounts of issuers trying to convince the shoppers that they didn't receive the good, for instance. So someone would call the issuer. Confidentially, we've had recordings of that where people call the issuer and they said, I didn't do that transaction. And the issuer and the guy on the customer care says, really, you didn't receive the goods? And he said, no, I didn't receive the goods. And he said, okay, so goods not received, it becomes a service issue. And then and then it's not counted towards their fraud level on the network side. It's insane. I think that it'll take years for the banking system to adapt to this situation where they are liable for the fraud. And once they realize that they have no way around it, they have to embrace it, they have to fight it, they'll develop the means. I mean, the reason we're seeing, I'll take it one step, maybe one level up. When you look at the numbers that Visa releases, I think every other year or whatever, they release what they estimate as the total false positive rate on the e-commerce side, right? The last number they released, I think, was for 1 year, $440 billion in false positives. That's roughly 10% from the 5 trillion industry, right? 440 billion. Imagine what would have happened if 10% of the people that come into a physical supermarket, a grocery store, would be declined. Imagine what would have happened. Falsely so. And the reason that happens, it's true, it's more complicated on the digital side, on the e-commerce side to do that than in the physical store. I get that. It's easier for the fraudsters there. There'll always be a gap. But the reason that happens is because the liability lies with the merchants that have no idea how to deal. And I apologize for all the people on the call. But really, it's not the expertise of the merchant to understand risk management. They were forced into it. The banks, the only thing they know how to do is risk management, whether that's a credit risk or fraud risk or whatever. That's their business. That's what they do. So once it gets pushed there and they embrace it and realize that that's what they need to do, and they actually go and solve the problem, not 3D Secure adding a second factor is nothing. Getting the data from the merchant side, that's what they need to do. And some of them have started doing that. If you look at some of the press releases from Capital One, you're seeing the emergence of some ideas around that. They'll get there eventually. I'm sure the banks would get there and figure out how to do that.
Yeah. One last comment. I think this is a really important point for everybody always to understand what is the rate of false positives and what's really a fraud rate. Because often the false positives rate is like 5x.
10 times higher. 10 times higher.
I think that's an important point always to realize. I mean, of course, it's difficult to really calculate a false positive rate. And there's no golden calculation how you can do this. But there are some ways to at least estimate this to get your internal ratio.
What we're doing, sorry, Ronald, for barging in, what we're doing on large enough merchants is we're always having a control group. Always. And if you have a control group and there's enough traffic and the statistics kicks in, you know your false positive rate. You know it. Yeah. You don't know who are the false positives, but you know the rate.
And Alex mentioned in his, let's say, story about CNP Moto. And I would like to maybe go back to Alexander to understand, is Moto relevant for fraudsters today? Because one of the points when in Europe 3DS came in, everybody said, yeah, the fraud will shift to Moto because there's no second factor on a Moto transaction. Do you see anything, Alexander, on your side, how Moto is used today for fraud, or is it more something old school? Not many merchants actually accept Moto anymore, and that's why it's even for frauds not really relevant.
I'm sorry, what is Moto? Is that what you're saying?
Mail order, telephone orders.
Sorry. Oh yeah, it's been years since I've heard that. Okay, cool. So in my opinion, so in my personal experience, checks was a big deal. And this is when credit cards were the primary focus, and carding and all the dark net and all that stuff. Checks was a big deal. One way to, use, Moto is still relevant in many surprising ways. I figured this would have been completely outdated, archaic, and just dropped away. But it's these old archaic systems that are easy to manipulate through the lens of a fraudster, right? So as I mentioned with checks, the other day I mentioned the micro deposits, from verifying services, Moto would be wrapped in there. Payments with checks in store is something I would wrap in there. ACH transfers, for payment. Those are the 5 ways that immediately come to mind that I think are still just as relevant today, even though they're not as present in the market. Through the eyes of a fraudster, approaching an end result. I want that TV. I want that pair of socks. I want that whatever. The fraudster would go through and look at all these merchants. And the first step, and I think this touches on the question that you had before as well, the first step is to see what payment methods they accept. And then if there's a way to call in and order, telephone orders and mail orders, things like that. If that possibility is there, that's going to be different than the information that you need to submit on a website. So when you call into a customer, that's one thing that I always talk about is social engineering, calling into the customer service line and saying, hey, I'm having trouble with your website. Is it okay with you if I bypass your entire checkout process and all of your security and you just type my number in over the phone? Can you do that for me, buddy? That's so to answer your question. Anybody who still employs these archaic systems, right? Credit cards, debit cards, crypto, and these stored values, they're moving up in the world. Those ones are still set in the past. They're just as vulnerable. And wherever they can be used, I would expect them to be used. I used them, all of them. So, yeah.
Yeah. And you know, just to complement that, I think you know, the highest fraud rates we're seeing are actually with one of our largest clients that is an issuer of prepaid debit cards in the US. And what you see there is the social engineering aspect, or what's today called victim-assisted fraud, is insane. And it's not about the phones, and you'd see YouTube. They would direct you to YouTube, you know, sessions that would explain exactly what you need to do in order to, you know, it's insane the level of sophistication you see on that when the price is so high. When the price is so high, and prepaid debit cards obviously are the most attractive, and
Right.
they're cash.
Yeah.
But I think that's maybe also again for the audience, I think it's an important point. Frauds are specialized a lot. So some people just doing education, some people just collecting information. So that's what I've learned over many webinars, many discussions. So it's like a whole ecosystem. And then, as you mentioned, Alex, there are a lot of education around how to do A to B. That's again part of the business to sell this kind of videos or providing the infrastructure. We got one question in Alexander that is in your direction. Can you see the question?
Yeah. What is mindset of a project? The obvious reason they perform this because they feel they can penetrate. Okay, I can only speak from my perspective, and I don't represent 99% of the fraudsters that are seen in the data. One, I never interacted with any other full-fledged fraudsters. So when I speak about my perspective, it's solely mine. I didn't go in the dark net and join communities and share and tout and toot my horn or anything like that. For me, it was the fact that I was a high school dropout. I went and got drunk and I went down a bad path in my life. As far as the social ladder goes, I was at the very bottom rung, no doubt about it. But with that, I was driven by the ability to destroy, take advantage, exploit vulnerabilities of systems that cost companies hundreds of millions of dollars over time, and man hours and you know, trial and error and all these different things. I get to look at a $10 million system or whatever and say, yeah, well, you put $10 million into it and I just walked right through. That was my driving factor. So that's one, was to myself. That was how I proved my own value because I was so low on the social ladder. That was one. So two is with fraud. At the end of my operation, I was able to use simple math to generate hundreds of thousands of dollars worth of either damages, assets, or money within the course of a year. Just math, a piece of paper, a burnt card, and math. And I was able to go, because I was so good at finding vulnerabilities in systems and finding exploits and social engineering, I was able to use literally nothing to commit fraud. That's something I talk about, math as a payment method. But anyway, so those are the two things. Is my own personal vendetta against the world back in the day. And then two is my ability to do a lot and drive a lot of value with zero resources. Those were my two driving features.
Thanks for the openness, Alexander, and for sharing this. Really.
Thank you.
Thank you. I think that's also maybe a good point to finalize our webinar for today. I think it's always interesting to get such great experts into such discussion, because we can see it's a complex world. Everybody has a different perspective, different background, different approaches to the problem. And that's why, again, thank you, Alex, for sharing your perspective and also sharing what you have seen in the industry. Alexander, also extremely thank you for sharing this personal insights. I think that's not always that easy to really share to the world what you have done or how you did it. So that's why thank you very much for sharing this background. Yeah, to the audience, again, 1 hour's over. It's always running very quick. Thanks for joining. Thanks for the questions. The webinar is recorded, going to be available. Yeah, thanks a lot, and see you in our next webinars. Thank you.
Thank you, everybody.
Thank you, everyone. Thank you.